Stock market investors, welcome back to the channel. My name is Jason. Today, I'm going to break down a video for you guys of 5 stocks to invest your first $1,000 in. I know, investing when you're first starting out is a very scary thing. No one wants to lose money, right? But there's that old adage, scared money don't make money. But I'm going to give you a portfolio that's going to give you the tools to grow this portfolio over time and give you a solid foundation. I'm going to go over 5 positions, some dividend plays, some broad market ETFs, a 5 stock basket that is going to be profitable for you over the long term. Let's get into the video. Stock market investors, before we get into the video, do me a huge favor and hit that like button. It's a great free way to support the content on this channel. And there's a new hype button as well. If you want to blast that, I'd really appreciate it. And if you want more stock market content, please consider subscribing to the channel. All right, check out your screens right now. Here is our portfolio allocation breakdown for the 5 ETFs that are going to be in this basket. For the first $1,000, we're going to invest in the stock market for beginners. Real quick, I'm going to do a brief overview, and then we'll get into each one of these ETFs for a further breakdown and why I love them for this initial beginner's basket. All right, 150 bucks goes in Jeppy. That's a dividend income player that pays out dividends on a monthly basis. Same thing with QYLD, but that's based on covered calls. That's an option strategy that generates income and they pay out the dividends to you investors each and every month. Next is QQM, which tracks the NASDAQ 100. VOO, a bigger basket that tracks the S&P 500. And VTI, that is a total stock market index that covers hundreds and hundreds of stocks. All right, all my stock market investors, if you take a look at your screen right now, I'm going to break down this basket for beginners, starting with the JP Morgan Equity Premium Income Fund, trading at $59.48 per share right now. In this ETF, they pay out dividends every single month, so we can really start to see that compound effect happen over time. So the dividend ranges between 7 and 8.5% every single year. Essentially, this is a glorified savings account. Most savings accounts for the big ones are around 3 to 3.5%. And this is a pretty liquid ETF that trades right now at the 8% yield range, which I absolutely love. So we're going to go over some of the holdings right now. And they're some of the bigger companies in America. Johnson & Johnson, Google, the parent company is Alphabet, AbbVie, Amazon, NVIDIA. So what they do is they pay out that premium each and every single month. So over time, you start to see that snowball effect and you reinvest those dividends right back in and the snowball happens over time, right? And the one thing we want to always check out is the expense ratios on this basket. It's coming in at 0.35. It's not super high, but it's not super low either. And it's trading at pretty fair prices right now. The PE ratio, TTM means trailing 12 months. So over the past year, 26.89, that's pretty right in line with the S&P 500. So Jeppy is one of my favorite ETFs in the stock market. Investors, the next stock in our basket is the Global X NASDAQ 100 Covered Call ETF, QYLD. This particular ETF trades covered calls, and the profits that they make, they give back to investors. This is one of my favorite ETFs that pays monthly, the monthly dividend players. You're never going to make huge money on the actual stock, but this is a great way to get exposure to covered calls without you actually having to trade the options yourself. Over the past 5 years, the stock is down considerably, negative 24%, but over the last year, down 6%. So that's a great time to buy right now. You don't want to buy when the stock is trading at all-time highs, right? Because then there's some downside risk. But since it's down over the last 5 years, 21%, I think it's a great buying opportunity to get in QYLD right now. Once this gets up in the $20s and $21 range, I would start trimming my position a little bit. But what this is going to do, it's going to be a monthly dividend player, and this is paying around 12%, another glorified savings account. So in these two baskets, I use these as a savings account to generate income, grow that basket, and then if there's an opportunity of a stock that I like, say Microsoft, it's down 25% right now, you could take the funds that you have in QYLD or JEPI and then buy individual stocks later on. But because we're beginners, we want to grow this, make a little bit of money, and then we could use some of those profits to buy individual stocks. Or if we want to add to this fund monthly, say we add $100 a month, then we can start to add individual stocks and really grow this basket. Okay. I'm going to go show you guys the holdings right now and how they optimize profits for investors. So the top 10 holdings are 50% of the total assets under management: NVIDIA, Apple, Microsoft, Amazon, Meta, Alphabet. And what they do is they trade these options and then they give the profits that they make to investors. And this way, you can get a monthly little check in your account and you can reinvest it. That's what I do. That's why if we take a look at our overall breakdown of the allocation, we're only at 15%, right? So this is a very small amount of the overall portfolio, but I do like getting those dividends every single month and kind of growing that part of this portfolio. Next, we're going to get into bigger, broader index funds. We'll start with the most broad. This is the Vanguard Total Stock Market Index Fund that tracks the entire stock market. Over the last 5 years, monster gains. Up 65% over the last 5 years. Really good stuff coming from VTI. This is a very broad basket of stocks that is relatively safe compared to individual stocks that can go down. Even some of the better companies, like I just mentioned, Microsoft is down 30% in a relatively short amount of time. So a lot of volatility. So the broader the basket, the less and less volatility that you're going to experience with this particular fund, VTI. And the expense ratio is one of the cheapest that exists, 0.03%, which is pretty much for free. It does pay a 1.1% dividend yield, which is great too. You can always reinvest that back into the basket as well. And the PE ratio trading around 27. That's pretty much in line, maybe a little bit higher than what the S&P 500 trades at historically in that 20 to 24% range. So I want to real quick show you guys the overall basket of what you're investing in VTI. So the top 10 holdings make up 33.72% of this entire basket of stocks, from NVIDIA down to Eli Lilly at 1%, and all the other remaining companies that are owned in this portfolio are under 1%, right? So not one stock is going to blow this portfolio up. NVIDIA is the biggest weight at 6.62%. So it's another reason why I love VTI, because it just tracks the overall total stock market. You get a lot less volatility than with some of these other funds. Now we're going to talk about VOO. This is my personal favorite. If you're going to pick one fund to invest in, go with VOO. Over the last 5 years, up 76.73%. And this tracks the S&P 500, the 500 biggest stocks in the United States. And this expense ratio, very small and manageable as well at 0.03%. And again, this also pays a 1.1% dividend yield. I do like checking the yield out for all of these. It's crazy that they're both around the same at 1.1% between the VTI and VOO. But the gains are a little bit better for VOO because, again, this is a little more concentrated. This is the top 500 stocks in America with the S&P 500 inclusion, right? So here are the holdings here. You'll see it's a little more concentrated. NVIDIA makes up 7.83%. That's the biggest position in this basket of stocks here with VOO. So this top 10 holdings make up 38.36% of the total assets under management. And the top 10 range from NVIDIA at 7% down to Berkshire Hathaway, Warren Buffett's company, at 1.49%. I do love this ETF, one of my favorite ETFs for sure in the market. And we can check out the performance of these as well. If you just click on performance here in Yahoo Finance, and we could see the annual total returns each and every year. VOO is constantly beating the category, which I love. And over the last, 8 or so years, we have 2 down years, 18% and 4%. But overall, for the most part, they're cooking with gas. 20% gains in the majority of years. The 5-year compound annual growth rate at 15%. So that's good returns on your money. And you also get that 1.1% dividend yield. Now, let's move on to the final basket of stocks, the most concentrated of the bunch. That's QQQM. All right, stock market investors, if you want to take on a little more risk, you can increase the percentage of QQQM. I like QQQM because the fees are a little less than QQQ. This tracks the NASDAQ 100, the top 100 stocks in the NASDAQ. This is a great fund. Over the last 5 years, considerable returns, 84.37%. So again, we're going to go in, we're going to check out all the little things that we need to check out before we invest. As you can see, the expense ratio, what you have to pay to invest in this fund per year, 0.15%. Still pretty low, in my opinion. And the dividend yield is a little bit less, coming in around 0.5%. The PE ratio, as we can see, is a little bit higher, right? So the upswings will be higher, and the drawdowns will also be a little bit worse than VTI and VOO. But we want to be in and get those monster gains, right? So that's why I love QQQM. Okay, we're going to go over the holdings real quick so you can see what's inside this basket. NVIDIA coming in around 9%, Apple at 7%, Microsoft at 6%. As you can see, this is a lot more concentrated, and it gives us a lot more exposure and sector weighting to the technology sectors out there. So we're going to check out performance, and I'll show you what I was talking about. So QQQM in 2022 is down 32%. And if we take a look at VOO, it was only down 18% in comparison, right? But then the next year, the bounce back 55% compared to 26%. So the drawdowns is a little bit worse at like 7%, but almost double the returns at 55%. So I love myself some QQM, guys. Absolutely love it. And over the last 5 years, 15.35% compound annual growth rate. Over the last 3 years, up around 30% per year. Really good stuff coming out of this ETF here in the NASDAQ 100 ETF QQM. So again, for beginners, you got $1,000. Let's allocate it with these percentages. $250 in QQM, $250 in VOO, $200 in VTI, and then $150 a piece in JEPI and QYLD. I think this is a great overall basket. And then what I would do, I'd put in $100 a month, whatever you can afford, $200 a month. And then with the first 100 or 200, I'd buy an individual stock, say Microsoft, SoFi, Palantir, a little riskier with some serious potential at upside. Break down some stocks that you like that have been beat up a little bit, maybe DraftKings or Chewy, and then invest slowly in individual stocks and see how you perform compared to the rest of your portfolio allocation. And then if you want to get a little more risky and get some exposure to crypto, maybe take $50 or $100 and start slowly investing in Ethereum or Bitcoin. I like the big dogs. I don't really mess around with the meme coins and all that stuff. I do think Bitcoin and Ethereum are here to stay, in my opinion. So if you want to start diversifying into a little bit of crypto, but I would keep that definitely less than 10%, probably less than 5%. I would go in that, stick to that 2.5% range of your overall portfolio, maybe up to 5% if you're a little more familiar with Bitcoin and Ethereum. But I think this is a great overall beginner's guide to investing, right? So 75% of this comes in the big basket ETFs here, and QQQM tracking the NASDAQ 100, VOO the S&P 500, and the overall stock market with VTI. And then we get a little monthly dividend exposure. I do like having those dividends be cycled into our account every single month. And then you just see them grow a little bit here, a little bit here, a little bit there. And then before you know it, 10% of $150, you have 15 extra bucks in there. 150 goes to 165, and so on and so forth. And you could take that $100 that you put in each and every month and distribute it evenly throughout this portfolio. If you want to do something like that every single month, kind of break down that $100 into each and every category. Let me know in the comments down below, what are your thoughts on this portfolio? It's one of my favorites. I think this is a great way for you to mitigate some risk, kind of set it and forget it, and then just dollar cost average in. Whenever you see a little bit of a drawdown, think about that as an opportunity of getting a discount on your favorite stocks, whether it's in QQQM, VOO, or VTI. And then I would just let QILD and JEPI just snowball over time. Throw 10, 15 bucks into those baskets every month or so and just watch it grow, guys. I think this is a great overall starter portfolio. Thank you guys so much for tuning into the video. Don't forget to like and subscribe. Peace.